for a couple of days, some days up, some days below that. But I suppose this rally has been so strong. I mean, yesterday we had the most incredibly strong day. The market was up, 400, 500 odd points. So a little bit of a pullback is not untoward. I mean, the sectors that really took pain here today were the platinum sector, down about 3%. And then the banking sector, even though a couple of banks, FirstRand was up, the banking sector down about 2%. But what was interesting, and for the life of me, I cannot find out why, Richemont, which is one of our biggest shares on the stock market, was up 5% today. Now, for a big share to go up 5% like that, and I cannot find any news why, is unusual. But certainly without that 5%, the market would probably have been down more than 1% rather than the 0.8 that it was down.
We saw two shares moving up on the back of some announcements yesterday. City Lodge, some nice numbers, and Santam out with a trading update. That share's up 3% on the day as well.
Yeah. Now look, I mean, those trading updates are clearly already in the market, and the share prices are reacting to it. The other trading statement that came out today was Discovery. I mean, they said they just continue to go from strength to strength. Earnings are going to be up between 25 and 35%, and the share price didn't go up much, but it went up 0.5%. But you look at that in contrast to other, and you can't really call them similar companies, but let's say the banks or the life assurers, Liberty, where the earnings are down seriously, and Discovery still shows an increase in earnings, which is obviously very, very commendable.
Wayne, Northern Platinum reporting numbers for the today, answering their critics. If you compare the numbers they published, the results, the earnings they've shown, compared to some of their peers like Anglo Platinum.
Make no mistake about that, yeah. Look, I mean, Anglo Platinum, the earnings disappeared. So certainly Northern's results were quite frankly good in relation to the other platinum companies. I might be mistaken, but I don't think Impala's reported quite. I don't think they've reported their latest quarter, the latest 6 months yet. But certainly, with the price of platinum having gone from $2,200 down to $700, back up to about 1,250 at the moment, and equally as important, the rand strengthening, there's no revenue growth here. And the cost of mining, it used to only be the gold mines, but now it looks as though it's gold and platinum mines. It's just the costs. The deeper you go, the more the costs go up, and it just doesn't seem to. I mean, no one seems to be able to control the costs.
Wayne, Nedbank announcing today a transaction that we've known about for a while.
Yes.
They're going to buy the stake in Imperial Bank, which they don't already own, issuing shares and paying cash. A good time for this deal.
I would think so. I think Nedbank ultimately will be the beneficiary of this. The time to buy a bank is when the world's collapsing around you and bad debts are going through the roof and everything looks decidedly poor. That's the time to buy a bank. So I think they're doing the right thing. I mean, Nedbank, it's not big in their lives. I mean, understand 1.7, 1.8 billion rand. It's not big in Nedbank's life. But Imperial share price up in a generally weak day. So obviously, the market thinks Imperial can use that money, apply it somewhere. And maybe there are some smaller industrial companies, smaller services companies that Imperial can get hold of at a good price, but more than likely they're just going to pay down debt with that cash.
An interesting trading update out from Lewis at their AGM, showing that sales are growing, which is a positive sign.
Yeah, look, in theory, this is the time for the credit retailers. If you were concerned about high interest rates negatively affecting consumer expenditure, yesterday's announcement makes it a full 5% cut in interest rates. Now that will boost consumer expenditure next year. Lewis down quite sharply on the day, so the market didn't like it, and I don't understand why, because I didn't think it was a bad update, but down about 4% on the day. But understand, you're buying these companies at 7 price earnings ratio. Now the overall market's 13, so it's virtually half price. Now, equally as important, earnings are depressed at the moment. The PE ratio should actually be quite high because the next move in earnings is up. So you're buying companies at what's called trough earnings at half the market price. I mean, surely this must be decent value on a 2 to 3 year basis.
Wayne McCurrie is with RMB Asset Management.